All right, this is the journal for the 22nd of February. We have some work to do. Um, this first trade that I took was on ES, which I will go over right now. Everything's been on the micro since I'm trying to crawl my account back. Had a pretty decent week so far, up $66, and all of that is pretty much from one trade. Um, but the first trade that I took was on ES at 10:03, and it was actually a really good entry. I was anticipating. Well, first of all, more importantly, let me go back. So here's the 4 hour. And this candle here was NVIDIA earnings on the 4 hour. This is what took us up. And that's why we were expecting these equal highs to be taken, or relative equal highs, and then um, draw up into this high as well. So the 1 hour looked like this. We had a Judas swing at 9:30. You can see right here. It's that 9:30 candle, ran sell stops before displacing higher. So what I was looking for was um, a silver bullet zone entry, and this is the 5 minute. We created this order block, this fair value gap. I'm gonna delete these lines since that was our liquidity levels, which got taken already. So now we have to use standard deviations to be able to find price targets. But you can see price was just sitting in here chopping around. And what I actually did was I was looking at this manipulation or this first leg of distribution, and whoops, should be there. Um, Even though we already hit our two and our 2.5 was up here. If you look at NQ, you can see at the same time. Let me go and replay the 4 hour. We still had higher targets on NQ to be taken. So we have two relative equal highs here, and then this high up here. So let me go to the 1 minute as well. And NQ offered a similar setup. You can see this barely got tapped into, and this one was too far above. So that's why I was looking at ES. But um, fear got to me on this trade, and I understood after I bought in, or before I bought in actually, I understood that the liquidity conditions that I was in were going to be high resistance liquidity. So it's going to be a while for my take profit to be hit. But I should have held because I knew where price was going. So that's something that I need to work on. But today, I don't really, I don't have a lot of days like that. There's not a lot of days where I engage with price when it's in high resistance liquidity, and it kind of just scared me because it was chopping around, and I didn't want to get stopped out. So like that's the reason why I didn't want to be in this trade for long, because it wasn't doing what I initially wanted it to as fast as I wanted it to. But I can't expect price to just deliver in 10 minutes always, or 5 minutes. That's something that I need to get out of my head, and I just need to leave my stop alone where it was. I didn't get stopped at a break even. I just sold pretty much at break even. The reason I did also is because I didn't like. I've seen this before, and I didn't like what price was doing. But um, I should have held because this fair value gap held. This fair value gap and silver bullet zone held, even though NQ dug deep, pretty deep. So this is 9:45. We came down and ran some liquidity, which was inside of this order block. And if you look at the 5 minute, that's what that was. It was a 5 minute order block and a fair value gap. And that's why it's important to zoom out. And I actually didn't see that at the time. But here is 9:45 or 9:54, and here is 9:54. So you can see drastic difference. ES is much stronger, much less willing to go down, and that's why I should have held. And I pretty much, I got a really good entry. I was anticipating these lows to get souped after I could tell that we were starting to fail after we swept this high. Because if you look at NQ, the same thing happened. We came up, and if you have the standard deviation here, you could see that it's hit, and we are also inside. of a bearish gap. So that's why I was anticipating um, for that to run some form of liquidity before going higher. You could see it was a 1 hour fair value gap that was untouched. That's why we got that move down into liquidity, and then we had them move up. But as we were moving down in real time, ES was just sitting here. As you could see, like I said, it was unwilling to go lower, and that was my sign that this low was protected. And my stop loss was actually 4 points. I got filled at 70. You can see it was 2 points underneath this low. I was anticipating that turtle soup. I only had a 4 point stop. It was at the bottom of this fair value gap, just in case it did want to run this low, but I was giving it a little more room. But after we came up, I trailed my stop to this low, and I got a little nervous after seeing this. And I got out because price ES was consolidating inside of this fair value gap, this SIBI, and NQ took out its high. NQ took out this high, and we had this 1 minute SIBI here that it kept respecting. So I got scared. I wasn't too confident in my draw on liquidity because of the high resistance conditions. It messed with my brain. But as soon as I saw this here on NQ, this move right here, we came down into this untapped fair value gap, got that big candle up, breaking structure. That's when I knew that we were going to go higher, and I kind of got bummed out. But that's just something that I need to be confident in. I need to be able to hold my trade through these kind of conditions. Just because it's going to take a longer time doesn't mean that I need to be panicking, doesn't mean that I need to be looking to sell too early, etc. So that's all. I did also second guess myself because of what happened that one time. You know what I'm talking about, Rob. There was like 1 hour equal lows. There was like, or 1 hour equal highs. There's like 4 of them, and I bought in at a silver bullet zone, and price just never went. It came down, stopped me out, and that was the one time I didn't move my stop to break even. So that's why I kind of had a little PTSD. But today was a little different because of the Nvidia earnings. So that's why there has to be context. After that Nvidia earnings, you can expect the market the next day to have a lot of buying pressure, even though we don't believe in that, but you know what I mean. There's a lot of people that are going to be bullish in the market the next day after Nvidia beats earnings, and that's exactly what happened. So that's why the news and earnings and etc. all that stuff matters when it comes down to context. But I'll now move on to the next trade that I took, which was actually a loss. So you can see I got stopped out in 43 seconds. So this trade, I knew exactly what I did wrong pretty much after I got stopped out. So what that looked like was this. This was actually oh yeah, it was 11 o'clock where I got stopped out. So we came up, we took out this high inside of this 1 hour SIBI. We took out this high up here. I'll make this red. And then we started to go down. So the first thing I was looking at was this breaker here. And you can see that price comes up, wicks into the breaker, institutional order flow entry drills, this SIBI here, and then sells off, taking out this low. And that's where my low hanging fruit target was. I wanted to get filled at 23.50, which was just the body of this breaker, and I was going to be targeting just this low. It was easy 25 points, and that was the lowest hanging fruit option. And you can see my take profit would have got hit, but I did still think the draw was lower, and this is where I messed up. So this is what I mean by when I made that YouTube video about trading what's in the other chart. If you look at the 15-minute, let me delete this stuff. There's no fair value gap here. There's no order block on any of these. This is the same 5-minute order block from earlier. So all this was turtle soup. So you have an order block here, but there's no 15-minute BISI, right? And you look at the 1 minute, we're just consolidating on an order block. So we have bullish conditions, Nvidia beat earnings, we're expecting the market go up. We shouldn't be expecting continuation of the downside. All we should be expecting after buy side liquidity gets reached, we should be anticipating on some form of sell stops to be reached. So I shouldn't even been looking to go short today. That was the first problem. The second problem was trading what's in the other chart, which I should have been looking at. You can see that we have a 15-minute BISI here on ES, but not on NQ, and we have an order block. Look what happens. We come down into that 15-minute BISI, just in that consolidation, where I went short at, and then we run sell side over here, leave equal lows because of SMT on NQ and ES. You can see at the time it just deleted it. Great. I hate that. Let me get it back. Okay. So, where were we? Oh, what's wrong one? Okay. So, here is 1101. You can see that NQ is stronger. Why is NQ stronger? Because of the NVIDIA earnings, right? So here's 1053 on NQ. Here is 1053 on ES. You can see SMT there, right? So that's indication that NQ is stronger. I shouldn't even been trying to short it. I didn't even realize that at the time. But I was anticipating turtle soup of this high and then a sell-off lower. But I shouldn't have, like I said, is because of that 15-minute fair value gap on ES. So NQ doesn't have to go lower because ES is inside of its bullish fair value gap that is untapped. So we can always anticipate some kind of bounce inside of that untapped fair value gap. Anytime there's an untapped, especially if it's on a higher time frame, like 15, 1 hour, 30-minute, anytime you see that, you can anticipate normally some form of move in the other direction of your bias. And that's what happened earlier, right? We anticipated this 1 minute BISI to get ran into, which it did, and then we ran into some form of sell stops, which is right here, which is relative equal lows. You can see we swept those into an untapped fair value gap. What happens? We're in bullish market conditions. We go higher. So that was my L on that trade. I shouldn't have even, as soon as I saw it consolidating over and over, I shouldn't have been wanting to short that, because when there's consolidation and you're in a trending environment, consolidation can only lead to expansion. So if the higher time frame narrative is bullish, which it has been, and Nvidia beat earnings over and over, like we said, we're going to go higher. So even though there was this 5-minute, guess what, untapped 5-minute SIBI, what happens? We get a reaction like this. We run a form of sell stops, right? There's a 1 minute BISI right here. That's a form of sell side liquidity. So that's what happens. There's actually one right here, which it did. It hit the lower one, respected this order block, and then went higher. And this is where I caught my next trade. So that's why that was a loser. I shouldn't have been looking to short and when we have that kind of market. So that one was completely on me. I just kind of got in my head about missing this entry. So, but I'm really glad I took this entry. And even though shortly after the trade, I'm glad I was able to stay mentally sharp, strong, and just completely stick to my plan and understand that I do know where price is drawing to. And even though I did just catch this for a scalp, I'm glad I took it, and my fill was really nice. I was barely in drawdown. So you can see right here, plus 36 at 11:15. So you could see that obviously the draw now is higher. And we have that SMT, which I didn't know at the time, but I'm going to use that now. We have that SMT at the lows, which means NQ is the stronger pair. And you could see that we have displacement through here. We leave a fair value gap. Now we create a breaker. So what was I looking for? I always like to incorporate my standard deviations in some way or another, since it adds to confluence. And you can see the 2 is lining up with this high. But more importantly, where do we expect, or what do we expect to happen? So if you have PD arrays on the opposite side of the curve, you should now be anticipating them to act as support if you now flip bias. So these were bearish PD arrays, right? This was a bearish order block. Now it's a breaker because now we're on the buy side of the curve. This is a inverted fair value gap on this side, which you could see supported price. So we have this breaker here after we made a new high, right? So that's what I marked out. And you can either use the last leg of manipulation, this high, the first leg of distribution, this one, they pretty much all worked. And you don't even need to have this for this trade. But I was anticipating this fair value gap and order block to not get traded to at all. And if so, I definitely wouldn't want the mean threshold to get traded to. So what did I do? I got filled right here. You can see buy price 79.49 and a quarter. Why did I choose that 79.49 and a quarter? I chose it because in these market conditions, price hasn't been perfect, and I knew that I could get a little better of an entry instead of just entering right at the candle body. So I entered 1 point lower than that. I entered at 49 and a quarter, and my stop loss was just 10 points. Like I said, if we were going to go higher, I wanted to see an immediate reaction out of this order block and this fair value gap, but I was really anticipating this to stay open because of how much displacement we got here. But if we look at ES, you can see here's 1110 as well. The same thing happened, and this is a huge displacement, right? And this is also a breaker here. So if you mark that out, drag this over, you can see where price was consolidating in. And use this over and over and over until we finally deliver to the upside. And look at the candle bodies, right? We close over this high. What happens? Every single candle body is closing outside of the breaker, which is really bullish. So all I did was I just targeted. I used this leg when I was actually taking this trade, just because it lined up better with the breaker. But all I did was target the 2 standard deviation. Actually, 1 tick below that, because that's normally, I've studied ICT, and he uses these for take profits all the time. And just in case the algo wants to be weird, sometimes it will trade exactly to 67.50 instead of, above it and through it. So he normally does 1 tick below, or 2 points below, or 2 ticks below, etc. But I also, this high was just one swing high that was acting as a small draw on liquidity. Obviously, we had this high up here, and if you go to the 15-minute, there was really clean equal highs right here that I wanted, but I was not prepared to hold all the way through lunchtime for that. And we also had an untapped order block up here, which I was expecting some resistance when we got there, and that's exactly what happened later on. But you can see shortly after, this played out really nicely. I should have held for this, but shoulda, coulda, woulda. You know what I mean? I'm not gonna sit here and say whatever. I just got done taking a loss, and I wasn't exactly sure. Since we were getting later into the AM session, time was not aligned with the price really. I don't normally like to enter after 11 o'clock, but if the setup's there, the setup is there. And it was. You can see the breakaway gap stayed open. The breaker was very nice. Held, hit our 2 target, and eventually traded into the high shortly after, which was right there. The next trade that I took was I got stopped out at break even. And this trade, I did exactly what I wanted to, which is what I am most happy about. So, which I'll go over in a second. This was during lunch. I came back and I was like, okay, what's going on? Let me see if I can catch something. So, here it's at 12:25. Let me see. So, this is the trade that I took. We had that short-term buy side ran that we were both just looking at. You can see what happens after buy side gets ran. We anticipate some form of sell side liquidity to get ran, right? And you can see we're not displacing through this high, right? We're anticipating for price to pull back because we're not getting large fair value gaps, breakaway gaps, etc. through this high. So, and like I said, if you look at the 5-minute, we had bearish PD raise up here. This is that 5-minute untapped that I was looking at. But I actually wasn't even engaged yet at the time. But so what happens? Like I said, we ran buy side, I was anticipating price to come back into a discount. What do we have? That once breakaway gap is now being used as support. You can see the mean threshold gets tapped into, very nice. We also have this the mean threshold of the order block, which doesn't even get hit, which is very bullish, right? So if you draw out just the body of the order block, you can see it hits that even more precisely. You can see that that's actually picture perfect. Let me delete that. You can see that I use the entire body of the first down close candle. You can see that it hits that to the penny and then changes the state of delivery. This is the last down close candle that took out liquidity. So as soon as we get a trade and a candle close above this, it's a change in the state of delivery. And what happens? What do we have? We now have a fair value gap and these relative equal highs that got taken, right? So what are we anticipating? What are we inside of? We're inside of this, a little busy, but more importantly, what do we do? We ran short term buy side liquidity. You can see that we're not displacing through the high once again. The candles are closing below the old form of liquidity. What are we anticipating? Price to return back into a discount of the premium of the range of the dealing range. Even if it doesn't, you can see right here. Price doesn't always have to come back into a discount or a premium when you are this bullish, right? And you can see it misses. But what happens? We just have an untapped fair value gap that was that once breakaway gap that got used. You can see that price is very bullish. It's not willing to sit around. It's wanting to go higher very fast, right? And how do you tell? You can see 2 wicks, candles are closing way above the fair value gap. That's a good sign. What do? We leave breakaway gaps, right? We leave one right here. So, what are we looking for? What was I looking for? So, I do all the time. Um, you can see this was also an MNQ. I like to use my standard deviation. So, I had this silver bullet zone here. I saw we already tapped into it. I should have bought this here, but I was a little on the fence. But then I saw this gap get created as well, and ES was pushing very nicely at the time as well. So you could see right here is 12.25, and we started to go higher. And you can see afterwards this is where I got stopped out. But we created this fair value gap. I was anticipating this low to stay untapped, or to stay not violated. This is where my stop loss was, and you can see it almost stopped me out, but it didn't because price understands that this is a point where um, it should not be violated. So I got filled right here. I normally like to use old highs that are inside of a fair value gap, but just because they're normally pretty sensitive. So I got filled at 83.75, and my stop loss was right here, almost an 8-point stop, and I was targeting this 2 standard deviation. Or well, I was anticipating price to continue during lunch or during the afternoon session, but lunchtime normally does have a raid on sell side liquidity. So this is what I mean when I was talking about earlier, where I was completely okay with letting this trade be stopping me out of break even. Even though I wanted this TP, this was these really clean 15-minute highs, which we did end up hitting earlier. This is how and when you can hold for a higher take profit. You can see how close of a cluster these highs are, and we have a untapped SIBI up here. So the 1 minute, in my head, at first I was like, just take quick gains, even though it's only 13 points. You could sell right here, just call it a day. I told myself, I was like, you know what, I'm gonna wait. I think I have a really good entry. It's lunchtime. I want to see if we get a lunchtime spool, and it was looking pretty good. We got up here, but this is why when people say they don't standard deviations don't work, I just kind of like have to shake my head because like what level is this? You know what I mean? Like this isn't some random level. It happens every single day over and over and over. And you can see that price hit this exact level to the penny once again, failed to go higher, and then eventually came down and ran these sell stops, which is where my stop was at break even already. I told myself as soon as the 2 standard deviation gets hit, I'm going stop to break even. Price should not come all the way back down here. There's no imbalance, there's no nothing. There's no reason for price to come down here. And you can see that eventually I got stopped out here, and then we get a sell side run before going higher. And this was that really strong draw on liquidity. I was tempted to enter back in on like this inversion, but I didn't want to. I just said, you know what? I'm 1 for 2 on the day. This trade got stopped at break even. I don't want to put on risk. I didn't like. I don't normally take inversion setups as well. Not the biggest fan, but it did work out. The draw on liquidity was higher, and it was also lunchtime, like I said. And this is what I mean. This is what happens during lunch. We normally have some form of sell side liquidity raid, and I was anticipating that to be happen after this 2 got hit, like I said, and that's exactly what happened. You could see Turtle Soup. If you bought this low, you can see that you're really not supposed to be in drawdown for more than like 3 to 5 minutes. If you bought this low here, exactly 1, you're already out of drawdown. In 1 minute, you're out of drawdown, pretty much. This is the only time you're in, or this 2 candles you're in drawdown, so 3 minutes altogether. And then this inversion holds and takes us into that liquidity right there. That was my target. But I am, like I said, I was completely okay with letting this trade get stopped at break even. The risk to reward was absolutely beautiful. I really liked the 25 point take profit. You can see right here, 25.5 points was where my TP would have been. Only 8 point stop. I was not comfortable enough to hold or have a wider stop, just because it was lunchtime. Like I said, if this probably wasn't lunchtime, this trade normally works out, but like I said, I was completely okay with letting this trade just breathe. Um, the stop to break even was completely warranted. There was nothing wrong with that. I'm completely okay with this trade. But yeah, that's all for this video. I really enjoyed making this one, and I'll see you in the next one.